Right. Hello. This is October 2nd. Welcome to the market recap. All right. So I actually forgot to tell you this. If you watched yesterday, which is, I think, September 29th, the video, that was the last day of the month and last day of the quarter. It is super important to know what's going on, whether it's a CPI, FOMC, or whether it's quad witching. Where you have a bunch of options contracts being expired, the end of the month, end of the week. There's a lot of things that can play into that volatility, and that's why you had that big move up, and then you had the ATR down, and then the last hour of the day you had a lot of like wicks and big like candles. Like even the last 30 minutes you had these big moves because of a lot of uh, companies like just closing options contracts and stuff. But at least in today, let's talk about this. Yes, I could have probably, you just saw this, I probably could have showed you this, and then you can actually, we can walk through it. But you know what? Today, I decide I'm just going to show you all of the morning session. Let's talk about this, and let's just see how things are reacting around lines, and why, again, you'll hear over and over these videos of what I use in my setup and how you keep it as simple as possible. All you need to use is Satty's ATR pivots. You need to use a VWAP, and actually you don't really necessarily need VWAP, but I like using it. It gives me sort of a reference of what things might do. But you can see right here, it doesn't necessarily tap it and bounce off. It just gives you a reference that, hey, look, we're flat, or hey, look, where there's a trend. But the other thing I use that's important, that's super important, is a 5-minute candles with a 30-minute overlay. The 30-minute overlay just helps me visually see where something can go. And you can see, like in this session, you see how it ended right here, and this was at 10:30. And then what did they do when the European market closed? They gave it all back and all the way that entire candle plus more. And then once you see that it actually broke more and held, and you're below this bull pivot, then you can now use that as resistance and a one-time framing. So let's go into this. So again, you had basically, I think, an opening near a previous day's close. These last two candles right here are the 10 minutes after market close. So I think we end up closing right here. It opened and then immediately shot up within 5-10 minutes up into this fib pivot. So you have the previous day close, bear pivot, bull pivot, fib pivots, and mid ATR. And so you'd like to use it as a reference. Here you came up, shot up, and then came back down, and then you can see that first 30 minutes it actually closed below, but then they shot it back up again. So there's a lot of volatility happening right here, because again, it's the first day of the month of October and the new quarter. So there are a lot of companies are probably repositioning their portfolios, things like that. So there's a lot of shenanigans. So you can decide whether you want to actually play or wait. But you can notice throughout the day there was just a lot of chop. So if you weren't getting in at good areas and selling at certain areas and taking your profits, then you're getting chopped up. So once you notice that they are holding for the first hour above, remember the rule is what's happening after the first hour. Are you above a certain or below a certain pivot? We're above the bull pivot. So now I'm going to assume that the sentiment for the rest of the morning at least is going to be bullish. So even though you had these dips, you see how these dips and breaks below, I mean, we sort of held, and you need to wait until those 5-minute closes. Once you start seeing a lot of these wicks, then you can tell that there's probably going to be a wiki morning. And sure enough, it was. There's a lot of little wicks. So dropped down and immediately came back up, and then it dropped down, came back up. And this right here is telling you that buyers are actually absorbing, and they're buying this, and sellers aren't winning the battle. So you just need to have patience. And so sure enough, you have a new TPO, and this was 10 o'clock. And so in one 30-minute candle, you rocketed it up almost 120 points. So you could have got in with one contract right here and anticipate that move at 10 o'clock right before the 10:30 to come up. Now that you have this big move, you have a lot of FOMO buyers. People are like, oh my gosh. So, I mean, you wouldn't necessarily short right here. You just never know. What I was expecting, this is how I played this, is I was waiting for the next TPO for it to come back at 10:30 and retest. But remember, European market has closed, so keep that in mind. So when you have that European market closed, you have less people in the market trading. So you might have the momentum die on the direction that it's trying to go. So one would think, oh, okay, well, this is a breakout, so we're going to keep going, and the next target would be to the ATR. Never have that bias. You always want to be nimble. Respect your stops. If you get stopped out, see where you're at, and then flip if you need to. So I actually got long right here, got stopped out, and I immediately flipped, and then I held all the way to VWAP to right here, because I was thinking, well, this is the test of the breakout, and then they could reverse again. So that's good enough. This right here was a huge move. This was like 50 to 70 points. I'm happy. Take it. 5, 10, 15 minutes, done. Should be done for the day if you didn't hit this move or this move, but kept on playing. One contract, not a big deal if you get in good areas and then hold. So when this actually then failed right here, I did not get into right here, then I knew, okay, the likelihood is we're going back to the open. So I waited, it came back down here. I wasn't necessarily convinced it was going to do it all right away, so I ended up getting right here and then holding a stop. This right here is 10 points. It never stopped me out. Wick never really closed, and then the end of the session ended up coming right down here by 12 o'clock. So normally this would have been done, and I would have played this move and walked away. Reason why, I don't really like to play anywhere between 10:30 and 12:30, and this is Central Time. With that said, not wanting to play that, you just make your move and you either set your stops and your profit targets and walk away. Now, if you decide to then play the afternoon session, then again, compartmentalize. Whatever happened in the morning, don't really worry about what happens in the afternoon. You just need to know where's your range. So your range is probably going to be right here and then possibly down here. This would be your range, because this is the high of the session, this is the low of the session. So if I was to flip and show you what ends up happening, you found the low and the high of the session. So 12 o'clock hits. Did we break this pivot by 12 or 12:30? It's either 12 or 12:30, but mainly it's a lot that 12:30 or 12 o'clock is important. So what do we end up doing? We ended up not breaking the lows and yesterday's close. So it comes down here. I want to anticipate and actually go long. I'm not going to go short right here until it breaks and shows me what it wants to do. So comes here, goes long. What does it end up doing? It ends up going 40, 50 points right here, dips, it fakes people, and this is a stop run. This was a great move, but you do not want to chase here necessarily. It goes right up here, and the moment it failed back below here, I didn't take this. I took this, and I weighted it to right here. I knew that if this was a big failed breakout and then reversal. Now here's the other caveat when it comes to afternoon plays. Look what ends up happening when it comes down here. If I were to actually close this to where you don't see what is happening and you are getting into right here, what would you do? You're like, oh, failed breakout, and now it's going to reverse. I'm going to target down here. Now this is considered a box play, right? Absolutely. That's theoretically what you should be thinking. But this again is support, because look right here. See how this candle never closed above? This is support until proven otherwise. So I'm going to get in right here and I'm going to sell and I'm going to wait. I actually probably will flip right here because it's support. If I get stopped out, great. Now I know this is probably resistance. So what is end up happening? Comes up, comes back down, but it never breaks. So now it's to the long. Now, what's going on in your mind, or in the majority of person's mind? It's the end of the day. You have the last hour. If they can't break this thing lower, there's either two things that can happen. Well, one, they've already proven they can't break it lower, right? They've already won 4 times trying to break it lower, but they couldn't. So it's two things. It's either going to stay and chop in a range, or it's going to break out and squeeze. Those are the two options. So this is your best risk reward for the long. So here you have profit take right here. And then what I end up doing, once you see it breaks above right here, the bull pivot comes down, retests VWAP, but look right here, you see this wick comes down, tests, and it ends up coming right back up here and holds above. So I'm actually getting a reloading to go long. So I sell right here to see what ends up happening, because this could have reversed. But then when I saw that it actually broke above, I'm actually going to be long, and I'm going to hold for the rest of the day. And what ended up happening, it ended up almost running another 100 points within 5, 10, 15 minutes. So you had 920 all the way to actually really it closed right here, because again, this is the last, or the 10 minutes after market close. So 980 from 920. So that's about a 60-point move if you would have got in at the pivot. It's also very scary to hold at the last 5 minutes. You're always like, but if with instead of options, if you're doing futures trading, a lot of times brokers, they'll close it right at close, or a lot of times you get that last 10 minutes or the 10 minutes after close. So that's if you're playing that last 30-minute squeeze plus the last 10 minutes. A lot of times they're closing their positions, and that's why you see these squeezes, is because, well, they've realized that they can't get it lower, so now they're going to close their positions, and they have to buy the contracts back, and it ends up squeezing it back up. So pretty easy day. I say easy. Trading is not easy, but if you actually see and trust in the levels and compartmentalize and sort of tell a story and never get biased, it's like, oh, big move, this has to drop. The market doesn't have to do anything. But you just have to get in and see what it ends up doing. If I got in right here, perfect. Step away, come back in 15, 20 minutes, set your limit orders up here. What I probably would have done was I would have done either my first sell right here, second sell here. The odds are the last 30 minutes of it making that 100-point move is rare, but we've seen it. But at the end of the day, I'd rather take, my 60 points, and not give it back, because this could have came up here, and you see right here, this was resistance at some point, and this could end up coming all the way back down the last 5 minutes of the day. So anyways, that's October 2nd, first day of the new quarter and of the month, and that's why you have all the shenanigans. Until the next recap.